Ladies and gentlemen, welcome back to the channel. Tesla stock today on a march to new all-time highs. The time has come where Tesla stock will soon be a $500 stock. More than $500 stock, in my personal opinion. Now, in today's episode, we're going to discuss all of your breaking news today, okay? Tesla stock is up 1.2%. I'm actually a little surprised because we had some really good economic data today, okay? And you are seeing a risk-on move in markets despite that. And I think it's, again, further validation to this strong December rally that we are about to see. Now, Nvidia's CEO made some comments as well, directed towards Elon Musk and the Tesla robotics division, and I think that's also pretty exciting. Got a ton of things to cover in today's episode. I don't want to waste your time. Do me a quick favor, hit that like button, subscribe to the channel. Cost you nothing to do those things, helps push these videos out to more people that need to hear this before Tesla stock is the stock that got away from them, okay? If you guys want to come trade and invest alongside us as well, that link is down below in the description of today's episode. With that said, let's get started. Now, let's start this off with some of your Tesla stock news today, okay? First and foremost, Mike Investing says Tesla has officially confirmed an incoming euphoric squeeze upon today's breakout. With the CEO of Tesla and Wales loading billions, it's clear the next wave on Tesla will exceed $700. Yeah, so you think my prediction is crazy? You know, Tesla going up about $100 from here into the end of this year. Well, some people are saying $700+ per share. Now, Nvidia's Jensen Huang did a 2.5-hour long podcast with Joe Rogan. Fascinating listen if you have not done so already. But on Tesla's Optimus, he says, quote, "I'm super excited about the robotics Elon Musk is working on. When it happens, there's a whole new industry of technicians. And so that job never existed. You're going to have robot apparels, because I want my robot to look different than your robot. So you're going to have a whole apparel industry for robots. You're going to have mechanics for robots, okay? Basically an entire new, economy. It really is going to form around robots. And, Elon and Tesla are leading the way. Now, Jensen Huang does say that is a couple of years away. We are hoping for some kind of launch, piloted launch, commercial contract or something by the end of next year for the robot platform for Optimus. But I think what Jensen Huang is really alluding at here, it's going to be a couple of years before people own robots, right? Before you and I have a chance to actually buy an Optimus robot to do the tasks that we want it to do. Whether that's, looking after your elderly parents or mowing the yard or doing the dishes or hell, babysitting your kids, right? I could use one of those some days. It's going to be a couple of years for that. But more commercial applications, specific tasks, I don't think it's going to be that long. Jensen Huang also recently said at a UBS conference, I believe this was yesterday, that by the end of 2026, there will be more than 10 cities which people will be able to order a fully self-driving vehicle. But he also goes on to say that over the years to come, that the trillion miles driven per year are going to be highly autonomous or almost all autonomous in the years to come. And clearly the winner to that is Tesla. Now, Melius Research today, their analyst Rob Hertheimer is strongly bullish on Tesla, issuing a $525 price target, up from $520 before. His conviction stems primarily from Tesla's widening lead in autonomous driving technology, which he believes has left traditional automakers far behind with virtually no chance of catching up. There is literally no chance of catching up from any of the auto companies. Even a Waymo, they're going to struggle, okay? Because Tesla's software is different than Waymo's, obviously. Tesla's is more deployable and scalable. But even then, you need talent. You need compute. Tesla has both of those things, and good luck for GM and Ford and Toyota and Stellantis and Hyundai and Kia and Renault to get the talent, let alone compute, to make self-driving even possible. Now, in the podcast episode that Jensen Huang and Joe Rogan just did, Jensen Huang talked about Elon Musk when Elon Musk was there for him as the first customer for their DGX-1 supercomputer when nobody else was. And these are really at this point like iconic images of, Elon at the OpenAI headquarters, and Jensen Huang delivers the DGX supercomputer and signs it for them. Well, Jensen Huang says that turned out to be OpenAI, but originally when Elon said, hey, I have a company that could use a supercomputer, and he said it was a nonprofit, Jensen Huang said his heart just sank because there was virtually a zero chance that a nonprofit would be able to pay $300,000 for this supercomputer, which is, crazy. Like, look at that. Look at the deflation in GPUs and supercomputers over time. This was back in 2016. Now, in the news today, following high demand, Tesla has extended its FSD supervised demo program in Europe by 3 months until the end of March 2026, allowing a lot more people to experience FSD for the first time. Germany, France, and Italy are all now showing dates of December 1st, 2025 through March 2026, with more countries expected in the future. They say, quote, our team will take you on a ride along, showing how FSD supervised works in real road conditions. Now, this is also pretty big news today. Tesla hosted the mayor of Rome for his first Italian FSD supervised road demo. The event marked the first time an Italian mayor tested the advanced driver assistance system in person in Rome's urban streets. So, we're just getting closer and closer to FSD launching in Italy and other parts of Europe. GM CEO Mary Barra has revealed in a new interview that she privately told then President Joe Biden that Tesla deserved a lot of that credit that GM was getting for EVs and EV adoption. She says, quote, he was crediting me and I said, actually, I think a lot of that credit goes to Elon and Tesla. Also in broader market EV news today, Ford Mach-E sales dropped 50% year over year in November 2025 in the U.S., falling to 3,014 units following the end of the federal EV credit. F-150 Lightning sales fell 72% year over year in November to 1,060 units, but that's partially due to a fire at an aluminum supplier factory, resulting in a stop of production. Now, just to further the point I was making earlier, Hyundai's head of its self-driving division, Shang Hong Song, has quit. He attempted to shift Hyundai's LiDAR-focused self-driving system to a vision-only camera system during his tenure, but grew frustrated working at a traditional car company. During Hyundai Motors' annual developers conference, he touted camera-based autonomous driving systems and faced unseen walls while trying to transition to software-defined vehicles. Song said it was not easy to aim to make an AI device rather than a car and implant software DNA rather than focus on hardware. His shift from LiDAR to camera was met with some pushback as Hyundai Motor has invested in LiDAR for a long time. Some of its LiDAR projects by research groups were halted by Song. Inside Hyundai Motor, Song's moves were considered following Tesla. Now, Tesla's stock at the time of recording this video is up 1.6% today, sitting at $454 per share. And, this could get even crazier to the upside in the final hours of the trading day today. Now, on the day so far, you have 67,000 shares that are being covered by hedge funds and institutions. Short interest still sitting at about 3%, so it's not moving around all too much, with about 71.75 million shares sold short. That is down sharply from where you were at the end of November, as this corrective or crash phase that we recently went through in markets was coming to an end. And So shorts have covered about 7 million shares during this latest surge in Tesla stock. Now, in option activity today from hedge funds and institutions, while it is a slower day, you only have 40 different trades totaling $37 million. You have a positive order value of 94%. So it is very positive. Now, in the headline indexes today, the Russell 2000 is down 0.25%, NASDAQ down 0.2%, S&P down 0.07%, Dow's down 0.12%. The VIX is up about 2% today, sitting at 16.40 or 16.40. So you're still close to the lower end range, but there still, again, is some fear in single stocks. And what I've argued on this channel is you are going to start to see broader participation in this market from the areas that have not really participated in this market recovery within the month of December. Now, the CNN Fear and Greed Index is sitting at 38, about midpoint of the fear category. Market momentum is fear, stock price strength, extreme fear, stock price breadth is fear. You did see yesterday more participation in single stocks, okay? So yesterday was a little bit of a breadth thrust. Today, you're getting a little bit of that as well, considering the indexes are red. There's a lot of stocks that are doing well today. But again, you're still in fear. You've barely seen a recovery here. Stock price strength, net new 52-week highs and lows on the New York Stock Exchange, sitting at 0.5%. So that is still very much in extreme fear territory. Put and call options sitting at neutral. Market volatility is neutral. Safe haven demand is now greed. And junk bond demand in extreme fear. Now, this morning, we did get a new AI investor sentiment survey that shows bullish investors had a sharp rise in the past week, going from 32% to 44.3%. That's kind of wild. Neutral investors fell a little bit from 25.3% to 24.9%, and bearish investors seen almost all of the decline from 42.7% to 30.8%. Wow. This is not the sentiment you would get in single stocks, but I understand why the reading came in so strong today. If you look at the headline S&P, I mean, you've recovered a lot, right? You're sitting close to all-time highs. So that makes sense from that perspective. But a little more bullish than I was expecting to see. Now, we did get some shocking economic data that came out this morning. And honestly, I'm surprised stocks are holding up as well as they are. So first and foremost, we got challenger job cuts for November. We were expecting 98,000. These are planned layoffs by companies. Last month, we were at 153,000. We came in at 71,000 today. Okay, so 27,000 lower than expected. Okay. And about a 50% drop from last month. So that shows things are okay out there. But initial jobless claims for last week came in at, get this, 191,000. The expectation was 220,000. Honestly, I can't remember the last time you came in this low. It's been a very long time. Okay? Throughout this year, you have not come in this low. Okay, the other lowest reading we had was 205,000, January 4th, 2025. So this was the lowest number we've seen in actually more than 3 years. Okay, it's been over 3 years since we've had a number like this. The lowest point in the last 3 years besides today's reading was 193,000. On January 13th, 2024. Again, you came in at 191,000. In the past 5 years, this is, I think, the second lowest reading ever. In the last 5 years, second lowest reading. The lowest reading was 189,000 on September 24th, 2022. So, like, this was some pretty shocking data today. Now, initial jobless claims have been more important since the government has been shut down and we haven't gotten, like, non-farm payrolls numbers that have come out in a while. We don't have a lot of, an understanding on how the economy is doing. Now, December 10th, you're getting a rate cut, okay? 84% chance today, basically unchanged from yesterday. There's almost, like, at this point, it would take, like, Fed speakers, like somebody that's really dovish, like Fed Moran or Fed Waller, Fed Williams, Fed Bowman or something, to come out and say, yeah, I don't support a rate cut to really move these odds. But you're in the Fed's blackout period, so you're not going to hear that. And that's why the odds of a December cut are not changing. But January 2026, the odds of a cut fell from about 31% yesterday down to 29% today. So that's actually not that big of a move. I would expect, with the second lowest initial jobless claims in the last 5 years, for rate cut odds to really come down. Now, the other side of the equation is most people always talk about the strength of the economy or weakness in the economy is why we'll get rate cuts or not. But the other side of that is inflation, right? If inflation is coming down, that could also raise the odds of a rate cut. When you take this apples for apples, you want a strong economy, right? Whatever that means for rate cuts is besides the point. You want a strong economy. You want a strong labor market. You want prosperity in this country that grows earnings, that keeps the AI trade alive and well. You also want inflation to continue to fall, which is maybe the only way that we get rate cuts. If we do have a strengthening economy next year, the Fed can cut into that as long as inflation is continuing to fall. And that's why I think the odds of a January cut did not move that much today. Like, you fell 2%, but you didn't fall like 10%, right? The odds of a January cut did not plummet, okay? That's because we don't know what the inflation story is doing. If inflation goes up in, November, December, then you're going to see the odds of a January cut basically go to zero. If inflation comes down more than expected, you're going to see the odds of a cut probably go up and help boost this market. But yeah, that was definitely some shocking data today. Now, also in the news, Trump administration is preparing to hold a high-level meeting to decide whether to provide licenses to allow Nvidia to export the H200 chip to China. Jensen Huang, Nvidia's CEO, in the podcast that he just did with Joe Rogan, says that President Trump single-handedly flat out saved the AI industry. If not for his pro-growth energy policy, we would not be able to build factories for AI. No supercomputer factories, none of this would be possible. Jensen Huang says we need energy growth. We want to reindustrialize the United States. We need to get back into manufacturing. Every successful person doesn't need a PhD. Every successful person doesn't need to have gone to Stanford. I think that sensibility is spot on. Jensen Huang also says that in just the next 2 or 3 years, 90% of the world's knowledge will likely be generated by AI. Jensen Huang says it's because what difference does it make to me that I am learning from a textbook that was generated by a bunch of people I didn't know, or knowledge generated by AI computers that are assimilating all of these and resynthesizing these. To me, I don't think there's a whole lot of a difference, which you put it like that and there's really not. Putin to India today says Trump is acting in good faith, I presume. Putin to India today says Trump has advisors who believe implementing tariff policies ultimately benefits the U.S. economy. He also says to India today, our agenda is not against anyone, but rather aimed at safeguarding our respective interests. He also says that President Trump has his own agenda, his own goals, whereas we focus on ours. Now, he does say to India today on how Trump might react. He says, neither me nor Modi, despite external pressure, have approached collaboration to work against someone. Now, Mexico's President Sheinbaum to hold a short in-person meeting with Trump on December 5th. Michael Burry has said he's expecting a prolonged market-wide sell-off that's worse than 2000, which lasted 31 months. He says, quote, I think when the market goes down, it's not like in 2000 where there was this other bunch of stocks that were being ignored and they'll come up even if the NASDAQ crashes. Now I think the whole thing's just going to come down, he said. Michael Burry was a one-trick pony, and he says this kind of stuff every couple of years. Like it shouldn't shock anyone at this point. According to a Reuters poll, the Fed is expected to cut rates. A Reuters poll shows most economists expect the U.S. Federal Reserve to cut the federal funds rate by 25 basis points on December 10th. 89 out of 108 respondents say. Now, half of economists surveyed, 50 out of 100, also predict the rate will fall further to 3.25 to 3.5% in Q1 2026. We know that we have a Fed meeting January 26th, and we have a Fed meeting March 18th. So basically, they're saying there's a 50% chance that we'll get a rate cut, another rate cut at either one of these meetings. Bank of America says today the S&P 500 will reach 7,100 in 2026. That's not much upside from here. 7,100 is, lower than even where a lot of analysts and market commentators are projecting the S&P could get to by the end of this year. That would only be upside of about 3.8% from current level. And here on the day today, the Japanese 10-year bond yields rise to the highest levels you've seen since 2007, but it's not having much of an effect from the yen carry trade perspective. Bitcoin did see some volatility, dropping back down to about $91,800, back up now to about $92,800, which is largely trading in this range you've seen in the past, 24 hours or so. From here, you want to see crypto continue to strengthen. You want to see a move closer to about 100,000. And there's been some speculation that once you get to like 96, 97,000, short sellers begin to cover on their short positions in Bitcoin, which could push it above 100,000. And this would really just trigger a risk-on rally in markets, right? Bitcoin kind of leads things. We're not getting much of an indication as of now. It's been some sideways trading action again for the last 24 hours. But if Bitcoin can break out from here, get back above 100,000, that would signal some very exciting things ahead for the stock market. So we'll see what happens. U.S. Trade Representative today says Donald Trump could withdraw from the USMCA next year, which has excluded a lot of Mexican and Canadian products from the tariff rates that Trump has set for Mexico and Canada. If there were to be a withdrawal from this, then that could be something markets respond to, but we'll have to see. Now, Tesla stock at the time of recording this video is up about 0.10%, experiencing some volatility right now, but I think we are well on our way to an end of the year rally for this market. I mean, in spite of all of what has even happened in the last 24 hours, Japan's 10-year treasury yields are continuing to rise. It's not causing the yen carry trade to freak out. Bitcoin continues to recover a bit. The best initial jobless claims in over 3 years did not cause risk on assets to crash. Hello, did we just enter into a new market? I don't know. But as we've talked about on this channel, there's a lot of tactical reasons for an end of the year rally, like the chase and the good setup that we have for next year from the economic standpoint. AI is alive and well. Investors have been underweight this market for a long time. They're, again, that kind of goes in line with them underperforming the S&P. But from a tactical perspective, there's a lot of reasons to rally into the end of December, and 2026 looks to be a really good year. So that's still the most likely path ahead. We do have some catalysts upcoming. We do have some catalysts tomorrow we'll talk about in the next video. We do have the Fed on December 10th. We do have a bunch of economic data coming out on December 16th. But putting all of this together, I think Tesla stock is about to experience a pretty damn aggressive rally here. And I want to be prepared and positioned for that. Do me a quick favor before we go ahead and wrap up this video. Hit that like button as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys have not done so already. If you guys want to come trade with us in the trading community, that link is down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.